over to Mr. Atul Daga, Executive Director and CFO of the company. Thank you, and over to you, sir.
Thank you so much. Good evening, friends, and a very warm welcome to you on this earnings call for Ultratech for our Q4 FY23 earnings. First and foremost, my apologies for the last minute delay in the time for the call, but I guess nobody is work from home these days, so you will be attending this call from office and hopefully have a good evening after the call. I don't have too many comments today and will be more than happy to rather engage with you and answer as many questions as possible, because performance speaks louder than words, and if there's any further clarification needed beyond our numbers, more than happy to answer. But a few quick highlights for this quarter. This quarter and this year in particular, we sold 100 million tons of grey cement from India in the last 12 months, which is a very unique feat. It's not just a number, because it requires collaborative effort, synergies from all angles, from all sections of the company, which encompasses almost 55 physical plant locations, manufacturing plant locations, then 235 RMC plant locations, 50 rakes being dispatched every day, more than 12,000 trucks being dispatched every day, and more than 100,000 channel partners supporting this network, along with, of course, the employees who've toiled day in, day out to make this happen. And it has been a consistent performance. It's not that a last-minute thought process or a last-month effort. Month after month, quarter after quarter, I think the company has done put in a fabulous effort to deliver this 100 million tons. I think we feel tremendously proud about it, and I thought of sharing my sentiments with you. Talking about our expansion, the phase 1 of expansion is almost complete. There are two or three smaller upgradations and brownfield expansions which are under trial and will get completed before the end of this quarter. We have till April 23, we have commissioned 17.8 million tons of capacity. That's a number to reckon with. Phase 2 expansion of 22.6 million tons is in progress, and as of now, we expect to reach our next milestone of 156 million tons by June 25 or before the close of 25-26. Talking about cement prices, because last time everybody was inquiring about prices, we did not see too much movement in prices in this quarter, and rightly so, because this quarter is all about volumes, and you saw a huge amount of growth. We've delivered a 15% growth overall in this quarter. Fuel prices is the next big element to talk about. Fuel prices have been softening. Petcoke has been softening. Coal continues to be pretty strong, still pretty strong. In spite of whatever softening is happening, we are not yet celebrating, because coal is still trending high, and China, to my mind, has still not started importing. China, as and when, it all depends on how the global markets perform with China coming into operation. One more highlight is about our cash flows. We spent almost 6,000 crores on capex this year. This kind of trend is expected to continue in the next 2-3 years. Most important and interesting aspect about our cash flow generation has been that we have had a positive cash flow after meeting all capex requirements, working capital requirements, dividend payments as well, and yet we have deleveraged. Small bit, but that goes a long way to tell how powerful and how diligently we manage our cash flows. With regards to green energy, we have ended this year with 210 megawatts of WHRS and 345 megawatts of renewable energy. We are on track on our ESG targets, having reached 557 kgs per 557 kgs per ton of cement, as compared to when we started this year, we were at 582 kgs per ton of cement. Last point which I would want to talk about is demand. Demand in the country seems to be very strong. We ourselves ended the year with 84% capacity utilization, the quarter at 95%, and the month of March was a record-breaking 100% capacity utilization. I'm glad to tell you that the momentum has been maintained in the current financial year in the first month, which means that the opening batting has been good, and I hope the middle order and the tail will also perform equally well. With that, I would hand over to you for questions. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir, and congratulations on achieving the 100 million plus volume for this year. Sir, couple of data points and the questions. In terms of the data points, the lead distance for this quarter and kcal cost for this quarter, and how do we see this kcal cost in the first quarter of this year and the second quarter?
So lead distance we have given in the presentation was about 413 kilometers, and 2.5 kcal is what we have reached in this quarter. Let me not go into the next quarter because the quarter is still going on.
But in terms of the broadly, how do we see in terms of the further reduction in power and fuel cost?
Yeah, it should be softening.
Any number we want to put?
I will not be able to give any number.
On the sir capacity front, so you have already mentioned that remaining 2.1 million ton will be commissioned in this quarter. So out of the next phase 22.6 million ton, how much will be added in FY24 and how much in FY25?
Let's stick to the results for the quarter, please. And we will update as and when we make significant progress on our projects. We will update everybody.
Okay. And in terms of broadly, if I look at so this close to 14.4 we have already added, including this April. So in terms of the growth in volume for FY24, is it fair to assume that 50%, even if I assume the utilization for this new capacities for this year, so 7-8 million ton from here and the base 5-7, so easily we should be seeing a 12% plus kind of a volume growth for this year.
Case is over here. So first of all, I think the volume growth has linkages not only with the plant, but it's a overall market dynamics, supply demand kind of situation. So even if the plant is ready to produce, ready to fire, but it has to be an economical market to service. So it's a very volatile and very, I would say, beyond prediction that what kind of volumes would be able to sold in the marketplace, either from existing or from the new capacity.
This is the operator. Sorry to interrupt you. The line for the current participant has got disconnected. We'll move on to the next question from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Thank you. Thank you very much, sir, for the call. So very strong operating performance, 15% year-on-year volume growth. So far, it seems that Ultratech has massively outperformed the peers in terms of volume growth. Given that Ultratech has added a lot of new capacity, is it fair to say at this point of time that the growth differential of 400 to 500 basis point over industry would continue in FY24 for Ultratech in terms of sales volume?
Yes, Pinakin, I believe so.
Okay, thank you. Second question is, sir, you mentioned at the beginning of the call 6,000 crore capex for the next 3 years broadly. So that 18,000 crore capex from 24 through 26, is it only on existing capacity of phase 2, or does that include some of the next phase of expansion?
I think 2-3 years got spoken in the casual flow, but our 22 million tons of capex is about 12,800 crores. That's what I was referring to.
Okay, so at this point of time, FY26, the third year of capex does not include.
But as we had announced, by the time we complete this phase of growth, we would have announced during this year the next phase of growth, wherein we would have capex cash flows also. I don't have a number on that, so I don't want to comment on that.
Understood. Thank you very much, sir.
Yeah.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good evening, sir, and thank you for the opportunity. First question on the volume growth. Now, this strong volume growth, if you could just share what would be the industry growth in your sense, and is it particular region where we gain market share, or is it across regions?
Oh, Sumangal, if we have operated at 95% capacity utilization on a base of 120 odd million tons, then we have grown, performed uniformly across the length and breadth of the country. So we've done uniformly well, plus here or a minus here, tolerance level of 3% plus minus might be there.
Understood. So it's not just because of North region where because of some plant closure we would have had some... No.
Okay. So that's very small capacity, and I'm talking about 126 million tons of capacity and not 5 million tons of capacity.
Got it. So second question, this Nathdwara merger, is it possible to quantify what could be the benefit of merger, say in terms of accumulated losses and also in operating?
No, I think it is more of consolidation that we want to carry out and have one single set of books. We were waiting for cleanup of all the non-core assets which we have completed. There were few past legal cases which we have completed, and now it's a clean set of books ready to get merged with Ultratech.
Okay. So no meaningful, benefit on.
No, because synergies we have already tapped into. It was for all ends and purposes working as a single, between Nathdwara management team was common, brand common. Wherever synergies had to be drawn out, we have drawn out. So it's more consolidation of numbers. In my presentations, when you see India operations, I think the only change might happen that the terminology India operations might undergo a change. Oh no, you still continue calling it India operations, sorry. So there's no change. It's a legal consolidation that we are going through. Next question, please.
Thank you. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sir, thank you for taking my question. Sir, given the fact that our utilizations are very high already, and if my understanding is right, the bulk of your new capacity now is going to come in FY25. FY24, there's not much capacity addition. What would your view be on pricing in that backdrop, for us and for the industry?
Thank you, Pulkit. Case is over this side actually. Yes, our capacity in FY24 definitely may not be the substantial, but let's see because how it shape out ultimately. But some other players are obviously adding the capacity. But Pulkit, as you know, in our industry it is very difficult to predict the demand actually. Say, I'll give the live example. 15 days back we were hoping sab acha chalta hai, but one fine morning you start some slowdown and kind of thing, but that's not a permanent feature actually. So it all depends actually, but holistically I would say it's likely to have the good demand, maybe anything between 7 to 8% kind of thing. So obviously I don't think there would be a strong pricing power would be in the hands actually. But it all depends actually how the capacity utilization set out actually.
Sure, sir. So cost is going to be our friend for the next 6 months is the way you look at it?
Pulkit, costs will definitely be a friend, and I believe, just adding further to what Jamarji mentioned, if capacity, see what is happening is, whilst we are doing a capacity utilization of 90-95%, all India capacity utilization is still not rising to a meaningful level. All India, all industry capacity, and my firm belief is that, and I've mentioned it on several occasions, when all India capacity utilization starts going around 85%, then you see different kind of performance level. So there is still some time.
Sure, sir. And any indication on costs on terms of spot fuel prices? How should we look at the next couple of quarters in terms of power and fuel costs?
They are volatile whilst they are in the downward trajectory, but suddenly there could be a spike also, as I was specifically mentioning about fuel costs, which petcoke has been softening. Petcoke has reached almost $150 or $160. Coal, on a same calorific value basis, coal still continues to trend around $170 to $180. The gas prices have softened globally. The atomic power generation has gone up in certain parts of Europe, which is easing the pressure on fuel prices also. But when China starts importing, and they will open up. They are opening up already. March was a phenomenal performance in China. They started importing, sucking out coal supplies from Australia, from New Zealand already, but we have not yet seen a big impact on the overall fuel prices. I will not start celebrating yet, as I mentioned earlier, on fuel prices. They are softening, but they could make a reverse trend also.
Sure. That's useful. You've been the most guarded in terms of any comment on fuel prices versus your competition. But that's it from my side.
All right.
Thank you. The next question is from the line of Indrajit Agarwal from CLSA. Please go ahead.
Hi, sir. Good evening. A couple of questions from my side. First, again, going back to coal and fuel cost, have we been changing our strategy at all in the sense of sourcing? Have we changed our mix meaningfully, or like coal, are we sourcing more from US rather than Australia right now, or it broadly remains the same that it was maybe a couple of quarters back?
Australia for us has never been the main source of coal. It becomes uneconomical being the distance, and US has been always the main source of imported coal. Yeah, we switch between petcoke and coal depending upon pricing, but spot prices cannot determine that. The moment we are able to cite some trends, we try to tilt the balance towards either of the fuel, whichever makes economic sense. Last quarter, for that matter, we were 52% petcoke, and we can go up further depending upon how the prices behave.
So now, as we are seeing prices declining, are we looking to reduce our inventory of coal petcoke, or we still want to be well prepared for any production uptick that we are?
No. Irrespective of prices, inventories have to be carried. We do a thumb rule of 45 days of inventories. Can't take a risk, or suddenly if there's some mine shutdown or anything, suddenly if supplies are not available, then our operations will suffer. So this is a long distance, long lead item. So we can't compromise on inventory levels. That will be very speculative.
Sure. And a couple of questions on the waste heat side. So we had a target of 318 megawatt by end of FY24. Are we still on track for that? Can we?
Yeah, we'll exceed that. I think so. 24, nah?
Yeah.
We'll exceed that.
So this fiscal. So we will be like 34% green share that we had guided.
Yes. That we are very confident we would, because see, green share. The non-investment base is alternate fuel. We are continuously ramping up our alternate fuel, which ultimately forms part of my guidance on 34%. So we will definitely meet our targets for sure.
Sure. Thanks. My last question is on the clinker conversion ratio. We are at about 1.41 times. So not just in the near term, maybe a 5-7 year horizon. Do you see this moving more towards 1.6, 1.7 times as the industry accepts more blended cement? Or do you think there will be a sharp distinction between the infrastructure projects which will continue to have higher OPC?
So there are two sides of the coin to this. One is with infrastructure continuously being the bellwether of demand, the consumption of OPC will continue to remain high, which means the conversion ratios cannot improve dramatically. However, there is a lot of advocacy which is happening around blended cement usage in infrastructure projects. Depends on how successful the industry is to percolate that message down, and we could see improvement in overall conversion norms.
Sure.
But
Thank you.
1.6, I can't do the math around 1.6. This quarter ended 1.41 was average, but quarter ending was 1.42. We have once in a while touched higher than 1.42 also, and in the near future maybe 1.5 could happen.
Sure. Thank you so much.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. A couple of questions. Sir, first one is on the legal side. Sir, how should we read point 8 notes to accounts pertaining to the Dalla asset?
So Dalla asset, it's under arbitration. Let that process get completed. We'll then take over that asset.
Sir, can you specify how much is the cement and clinker over there? The asset which is under arbitration?
Sorry, 2.3 million ton clinker only. No grinding capacity at that location.
And sir, corresponding limestone?
The limestone mines would be about 100 million tons over there.
Okay. Perfect. Sir, you wouldn't like to comment anything on the course of action incrementally or possibly how it landed in arbitration?
That's a good point. Good point, Ritesh. Next question, please.
Sir, next question. Any specific cost initiatives besides the green power and AFR that we are working on, either on lead or moving from road to rail or exploring more of coastline, DFC?
I think this topic might take half an hour of discussion by itself, but there are lots of initiatives that the organization is taking, whether it's on digital ways of working, which is helping reduce our operation costs, or optimizing my lead distance, or optimizing my freight costs. There are lots of initiatives. I think the leading question would be, you might ask me what is the target number. I don't have a target number because these are continuous improvement programs. So we have improvement programs happening in our maintenance costs, in our power consumption. Some are investment-led, some are improvement in efficiency, mining operations for that matter. There are dedicated specific task force and actions being taken to improve the cost of mining. So you name the field, work is continuously on. There's never a status quo that we would reach.
Correct. So just last question. You indicated we are positive on demand. You also indicated, I think, batting order, middle order, and tail will follow, and we are a bit on volumes. So my question is, and you also indicated at the India level, utilization level is still not at the desired level. So what would be the probability for the cement prices to remain at the current level if the cost curve goes down, and what you indicated, utilization at the India level is not at the desired level?
You tell me, you are there in the field, what will happen?
So pricing should go down, logically, but I would like to have your thoughts, sir.
No, I think, there would not be too much pressure on prices. I don't believe so. We have seen in the heat of the January-March quarter, if volumes are so high, then prices should have corrected. Prices did not correct. We have maintained our prices as we were in the last quarter. So nobody wants to just crash prices for volumes.
Sure. But sir, adjusted for seasonality, automatically it will come off.
Sorry?
Sir, adjusting for seasonality, technically it has to come off because volumes will dip.
July-September quarter is always a weak quarter, but my sense is otherwise prices should remain stable.
Sure, sir. I have more questions, sir. I'll join back the queue. Thank you so much.
Thank you.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just a couple of questions. So firstly, on demand, the slide around the various demand drivers that you present shows a relatively weak performance by the infra and commercial segment, whereas the housing segment is what is driving the demand. So with a healthy budget which we've seen for FY24, like, are you already seeing the infra segment also picking up, or still sluggish as of now?
Yes. So one important aspect which, and I've mentioned it in the comments also, is when the harvest time happens, normally labor availability goes down for the infra projects, and that's where new project taking off also is slow. So it's about new projects not taking off at a point in time, which results in a mild slowdown. I think a sneeze should not be considered as a flu. So it's a very mild thing. But given the impetus on infrastructure that the government has, given the fact that this is election year, I believe demand will continue to grow very strong.
Okay, understood. And also on exports, like this quarter, you've shown a higher exports volume, and so has the Sri Lanka situation fully normalized now? How are we placed?
Yes. I think it's almost normalized, and we have started getting back our volumes. We at the peak of the problem time, we had almost 250 crores outstanding from Lanka. Everything, the last penny has been received. Volumes have started picking up. The economy has started picking up. So our exports are also going up.
And the subsidiary financials in the presentation you have disclosed, other expenses have actually almost come down to zero in Lanka. Is there any major change in the operating structure which you have made there?
No. What is this, Ankit?
The other expenses line item, this is in slide 34. It shows that it was 84 crores last year, it is 6 crores this year.
No. I'll ask Ankit to get back to you on this, Amit.
Okay, sure. And just last question, on the fuel cost, you mentioned $194 consumption cost right now. What we understand is on the spot level, the petcoke costs have dropped to around $140-$145 per ton. So, by when will these current spot prices start reflecting? Generally, it's 45 days that you take to consume the fuel.
I would give about 2 months.
Okay.
Just 1 second, the clarification. Yeah.
Amit, that other expenses include exchange loss because last year in Lanka there was a currency depreciation which was very high.
Okay. Understood. Okay, that's all from my side. Thanks.
Thank you. The next question is from the line of Pratik Kumar from Jefferies. Please go ahead.
Hi, good evening, sir. I'm from Network Great Results. Firstly, my question is on pricing. So,
sorry to interrupt you, Mr. Kumar. The audio is unclear from your line. Please use the handset mode.
Are you on speaker, Pratik? So, a little better.
Yeah. So my question is on pricing.
Yes, please.
The line for the current participant has got disconnected. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Rashi Chopra from Citigroup. Please go ahead.
Thank you. At the last quarter, you had mentioned that in fourth quarter, the EBITDA per ton will cross 1,000 rupees, and then more medium term, you're expecting 1,000 to 1,200. So obviously, you've delivered on the fourth quarter number. But what are the thoughts on the 1,000 to 1,200 medium term, given the way costs have come off?
I believe we deliver on what we commit.
So I think my question is there upside to that?
Upside to what?
1,000 to 1,200 medium term.
Well, I wouldn't want to count it so soon. Let Q1 play out. We'll see then.
Okay. Also, the green power in this quarter, was it 20%?
15%. No, sorry. 21%, no? Total green power. 25%. Sorry, my bad. Sorry, 25%.
25%. Okay.
Which includes WHRS plus renewables plus AFR.
Right. And what was the working capital release in the quarter?
In the quarter, how much is the working capital release? Release 2,300 crores.
Okay.
Quarter.
Okay, thank you.
Thank you. The next question is from the line of Navin Sahadeo from ICICI Securities. Please go ahead.
Hello.
Hi, Navin.
Right. Thank you. Thank you for the opportunity. Sir, 2 quick questions. One, are there any efficiency measures or any other special initiatives the company is taking on other expenses front? Because on absolute basis, even at, let's say, volumes of nearly 32 million tons, the total amount is actually less than what we saw at even when the volumes were just 23 million tons. So I understand it is partly fixed, partly variable. So I'm just trying to understand, are there any initiatives or any efficiency gains which have been factored here?
No, Naveen, there's nothing extraordinary. I think I would say it's an operating leverage play. And if I'm trying to think, the biggest other expenses would be something like advertisements.
Advertisement is
Yeah. So that I really cannot predict or cannot have a standard flow depending upon events when campaigns are run. So that would be a bit of a yo-yo. You might see in this quarter the other expenses are slightly higher because there will be huge amount of ad spend. Could be. And other than that, there is nothing abnormal which comes to my mind.
Sure. And sir, just directionally, well, of course, previous participants did ask you about pricing and fuel costs. My just one question directionally. April as a month on terms of realizations would be better versus the March quarter or would be a tad lower? How would you look at it directionally?
Directionally good.
Sorry, I didn't get you.
That's nice that you didn't get me. It's positive direction. It's not declining, so.
Understood. Good. That's helpful. Thank you so much.
Thank you. The next question is from the line of Rahul Gupta from Morgan Stanley. Please go ahead.
Thank you. Thank you for taking my question. Dada sir, I have a couple of questions. Sir, if I do back of the envelope math, it suggests that fuel cost would come down by around 15% over the next 2 quarters. Of course, assuming everything remains same. Is that a fair understanding? And secondly, given fuel costs have surprised positively on spot basis over the past few months, is it fair to expect that the focus would be again on volumes and the positives that one would get from fuel prices would be offset by the cement prices during the year?
I lost your first question. What was the first question here?
Sorry, what I was alluding to was when I do my back of the envelope maths, your fuel cost should decline by around 15% over the next couple of quarters. But of course, this is assuming everything remains same.
Yeah, if everything remains the same, then the maths could work. But spot prices are never on the spot. They are changing on a daily basis. If the trend is continuously down south, then yes, you will be proven right.
Yeah, and just to take this point forward, does that mean we get more leeway to play on or focus on volumes? Sorry for the word, at the expense of cement prices during the year? Even we have support from cost?
Rahul, ultimately we play for EBITDA per ton and not for a single lever. And nobody in the right sense, in the right mind frame would want to lose on EBITDA per ton.
Agreed, makes sense. Thank you so much.
Thank you.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, thank you, sir. I got disconnected. Sir, first question on the capital structure over the medium term. We've deleveraged quite aggressively without compromising on growth. So now as we are approaching net cash, should we expect a higher payout or we will look to accumulate cash on books over the next 2-3 years?
One is this year our dividend payout is almost 22% of profits. It will keep on going up steadily as percentage of profits is my view. Of course, the board will take a final call, but the reading that I have is it will keep on improving.
Okay. Sir, over last several years, we've been quite active on M&A. I mean, how is the landscape now? Are there meaningful assets still on the block or it's largely going to be organic going forward?
We believe in India growth story and we want to continue to participate in India growth story. So we will grow. Whether organic or inorganic is a second thing. And inorganic is always opportunistic. It also has to, in my definition, it has to give us a profitable growth opportunity. In that scenario, we will examine it. If it does not make sense, we'll drop it.
Okay. And just one last thing on April prices is not very clear. I mean, since the month is almost over, is it possible to share some regional sense on how the price have moved versus March?
I don't want to comment on month-to-month numbers.
Okay, got it. Okay, thank you and all the best.
Thanks.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, hi sir. Sorry, my call got disconnected. My question is on clinker capacity. So you reported like 84% utilization for cement for FY23. What would be your clinker utilization for the year, and what is our clinker capacity post this first phase of expansion?
Just 1 second. You ask difficult questions, so we have to. What is the clinker capacity? So clinker capacity utilization was about 91%. Q4FY23.
So what would be that for full year? You said 84% for full year for cement, right?
Yeah. So what are you asking? So you
83%.
For what?
Full year.
Cement is 84% full year. Clinker is 83% full year.
And what would be your clinker capacity?
Clinker capacity, do you have a number, guys? Huh? Surprisingly, we don't have a clinker capacity number immediately. I'll give it to you separately.
Okay. So second question is on pricing. So last quarter, was there material difference in regional pricing trend?
No, it almost remained flat. A rupee here or a rupee there within regions.
Okay, so there is no change in competitive intensity in any region specifically?
No.
And lastly, on other expense, so other expense growth seems lower on a year-on-year basis versus volumes. That's largely related to, I mean, I saw a comment on operating leverage benefits, but is there some expense which is missing this quarter?
No, nothing is missing. Nothing has been stopped. It's purely operating leverage.
Sure, thank you. These are my questions.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Good evening. Sir, my first question is, on this 25% green power that you said, can you break it up between how much is AFR and how much is...
6% was renewable energy, 15% was WHRS, and balance would be alternate fuel. No, sorry.
RE power in the grid connection.
Sorry. So RE renewable energy is higher, no? Then 15% is WHRS and balance is renewable energy.
Okay. And sir, AFR, is it even cheaper on a calorific value basis of whichever ways we measure it, or it is more about attaining the green targets that we have?
No, we take calorific value basis. Jabardasti ka kachra nahi dalna hai.
So secondly, on WHRS, you had this target of 324, which you said you might exceed, but once we go to 154, what is the potential on WHRS we have? Because it should increase substantially with the kind of clinker we are adding. Is that right? Because the reason I'm saying otherwise, your share on green could decline, in case we don't match it with incremental WHRS. Just want to understand where we stand on that.
Yeah, Ashish, actually, I would put this way. Now, all the new plants are done with WHRS actually, and as far as new plants are concerned, about 55% power can get generated from WHRS for the new plants. So, average obviously certain old plants where there is no possibility or layout does not permit or there are other challenges, but new plants can give up to 55% of the US power.
Further to that, Ashish, we are not adding any thermal power capacity.
Yeah.
So balance we are depending on grid as India improves in terms of power supply and PLF. Grid supply is becoming a safer way of supplying, absorbing power in our unit. So irrespective of organic capacity going up or WHRS maturing on our current capacity, future capacity will remain balanced with green power.
Yes. So if I ask this differently, so the 324 number, if my understanding was right, it was based on the 111 million ton capacity basis. And is that right, or this included this 130? So, or is it based on 134 million ton? I'm not clear about that.
So on 130 million ton, it was around 303 megawatts.
Right. So once we go from 130 to 155 or 154, we should be adding roughly another 100 megawatt. Is that right?
Around 65 megawatts, which will take us to 370 megawatts.
Okay. Got it. Thank you so much.
Thank you.
Thank you. The next question is from the line of Devesh Agarwal from IIFL Securities. Please go ahead.
Yeah, good evening, sir. Thank you for the opportunity. You did mention that probably pricing may not go up, but given your high utilizations, do you think that the share of premium product in your overall mix can go up and that can support the pricing?
Yeah, it is already going up. We have crossed 20% in terms of premium products, and which also directly, indirectly help absolute realization, average realization. So,
any targets, sir, for FY24?
Yeah, I'll tell you at the end of 24.
Actually, on a net basis, how much more do we earn out of premium products?
Incremental margin on premium products, there are multiple. Do you have an average number? Just 1 second.
Around 10 rupees a bag extra, yeah.
So my colleague tells me 10 rupees a bag would be an average earning. There are multiple products, so that clearly is $200 per ton.
Understood. Okay. Thank you, sir.
Thank you. The next question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi, sir. Congrats on great set of numbers. Just want to understand one thing. If I look at your kcal costing, you are industry leader on many operating fronts, but kcal of where Dalmia is speaking about 2.06 in this quarter, and you are at 2.5 kcal. So will this difference narrow down in upcoming 2-3 quarters with the perfect understanding?
Some mysteries can never be solved. Having said that, our largest footprint is in all the infrastructure projects. You name an infrastructure project where Ultratech is not present, and that is where the whole tilt is, because we are supplying OPC as compared to other players who are not supplying so much of OPC. Everything has a challenge.
Okay, got it. As you again reiterated your stand that once the industry capacity utilization reaches 85%, we get a pricing power. But somewhere that thing does not play out in Q4.
So you see, only 3 or 4 results have been published. You'll have to wait for other results to come out. Then you'll know what the average capacity utilization of the industry is. Clearly, we operating at a significantly higher base and higher capacity utilization, we would have gained. I believe we would have gained. We would have made significant inroads in the market.
Yeah, like if you operated at, let's say, near 100% in March, so obviously I believe industry might be above 85% in March, but that pricing play is still missing. That's what I'm trying to understand.
No, but I don't think India is operating at 85% plus as yet.
Okay, got it. One last question from my side. When you're talking about 34% green power, can you give a ballpark number? How much is by WHRS and how much will be green power?
26% was our target on WHRS, and 9 or 10% was our target on renewable energy.
Okay. Thank you. That's it from my side.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Quick 3 questions. First is, where are we on RAK? Post RAK, how has the mix shifted captive volumes versus what we source from RAK? Has our market strategy changed specific to white cement and wall putty? That's the first question. Second is on construction chemicals.
I will forget. Let me just take one by one question. So you said, where are we on RAK? RAK is in Russell Khema, and it's very much there. So sorry, that was a bad joke. But I think the operations are now coming under control. We have started rebranding the entire RAK output into Birla White. Birla White bags are already in place at Rack White, and they are shipping Birla White as a product from there. Prices for white cement have seen a consequent improvement in the country. There is a consequent improvement in our market share as well in the white cement space. I think this was a strategic investment, which to my mind is playing right at the moment. Yeah. Sorry, what?
Right. Sir, I think we were at just at about 50%, and we had indicated we could increase the stake further. So any timelines on going to 80 or 100? That is one. And you indicated on market shares. Is it possible for us to quantify something?
Going to what? Sorry, what?
Sir, RAK stake.
Take time.
What?
50% utilization.
Capacity utilization. Okay.
No. Sir, stake, sir, economic interest.
Stake. So we are working on it. Hopefully in this financial year, we'll be able to consolidate, make it our subsidiary.
Okay. And sir, on market share, you indicated that market share has increased. Possible for us to quantify?
No, I don't have that data. But the very fact that I am importing that Rack White product as a product name is out of the market and it got replaced by Birla White, clearly there is a market share gain.
Sure. Sir, construction chemicals, any headline numbers for the fiscal revenue and EBITDA? Any targets?
See, EBITDA is not measurable. We have clocked about 550 crores of revenues in construction chemicals this year.
Sure. And sir, we have plans on captive manufacturing over here. Any updates over there?
So there is a lot of captive manufacturing happening in all our construction chemicals.
Sir, you had indicated we'll put up more plants across our factories. And
that's what I meant by captive manufacturing. We have both models. A lot of places we are using, because it doesn't require so much of space, we are using space available in our factory premises depending upon the closeness to the market, or doing contract manufacturing outside. Do you have a number of locations that we are present in today with our contract manufacturing plants?
16 locations.
How many plants do we have? Ritesh, I'll announce on the call if your questions are over. How many?
2 more. Quickly, sir.
Just 1 second, Ritesh. Just 1 second. What's the number of plants, ballpark? Just 1 second. Sorry. So I'll let you know, Ritesh. Let's not waste time.
No, sir. Just quick data point, sir. Same thing on RMC, any change in strategy? We have the numbers for the full year, but are we upping?
Yeah. We are going full steam ahead on RMC. We have already reached 235 plants.
231 we closed.
Last March we ended with 231 plants, and further few more plants would have got added in April. We will continue to grow and hope to double this number very soon.
39
and 39 physical locations that our contract construction chemical manufacturing is happening.
No. But, so just two quick ones. Bulk cement terminal and railway sidings, what's the number right now, and do we have any numbers targeted for next 2 years?
What was the first one you asked?
Bulk cement terminal and railway sidings.
3 terminals are there. 7. Bulk terminals is 7 and rail heads almost 300.
Sir, targeted numbers for next year?
Don't have a target number. And bulk terminals are as part of our 22.6 million tons. There are 2 more bulk terminals planned. One in UP and one in Karnataka and one in UP.
Sure, sir. This is helpful. Thank you so much.
Thank you.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Amit is not there. Let's take the last couple of questions, please.
As there is no response, we'll move on to the next question from the line of Anupama Prakash Botra from Arihant Capital. Please go ahead.
Thank you for taking my question. So I have a specific question on Eastern region. So I wanted to understand your perspective as far as East India markets are concerned and the company's plans in Eastern region for coming years.
We will continue to grow in the Eastern markets. Eastern markets, one of the most deep markets in terms of growth potential, highest density of population, lowest level of development that still continues to plague that market. So there's a huge amount of opportunity that we see in the Eastern markets.
So, like, what kind of capacity expansion is the company planning for coming years?
Out of the 22 million tons that we have announced, close to 5 or 6 million tons is coming up in the Eastern markets. We are today present with how much? 22 million tons of capacity in East, which will go up by 5 more million tons in the next 2 years.
And how much like clinker backing for the same?
We are always clinker backed.
Okay. Fine. Thank you so much. That's it from my side.
Thank you.
Thank you. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. So in your presentation, slide 24, you have given breakup of capex under various heads. Can you give some color on, what is included in ESG, other capex, and strategic investments?
So, strategic investment was RAC-wide, ESG, largely is WHRS, and all the capexes which are power saving related, which help me reduce or AFR investments.
And others?
Others would be balanced modernization. There is huge amount of stuff which will keep happening in a live operation. It could be some building also or some plant modernization. Anything is possible. Yeah, various infrastructures will be there.
Okay, so WHRS is part of ESG and not in both.
Yes, absolutely. Absolutely.
Okay, thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. On behalf of Ultratech Cement, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.